Hi everyone, my name is Moronga Musetli and we're back with Friends with Money. Now that you know what goes into your financial statements and you know what your income statement is, let's talk about the big bad boy, the balance sheet. This one is nobody's friend because its job is to balance. You actually have to make things equal to the other thing. However, it's the simplest thing to do if you have recorded all your transactions correctly. Your balance sheet is just a reflection of how much your business is valued at. Its job is to tell investors, this is the list of assets, this is the list of liabilities, and this is the balance of the two, capital. This is how much we've invested in our business, and this is how much we stand to make overall. This is also how our business is growing. So this one, much simpler to do than the income statement because it's mostly just addition. You're going to list all your assets. You'll start with your fixed assets, which are things that'll last for longer than a year. Again, your laptops, your equipment, any furniture you have in your office, these are fixed assets. You own them, but you don't sell them within 12 months. It takes you a lot longer before you sell them. To that, you'll include current assets. This is your bank account balance. This is your debtors, anybody who owes you money. And this is any stock you might have for those of you who are in the inventory business, or for those of you who are in e-commerce and happen to be stocking up some stock to send on your way to your customers. You list all of these together, you total it up all together, and then you just have one long list of assets. From there, you're going to put in your equity and your liabilities. Your liabilities, like your assets, twofold. You start with your long-term liabilities, which is long-term bank loans or long-term grants like your YDF and your CEDA loan. And then you go into the shorter-term ones, like owing your suppliers, or maybe you might even owe BTC because you weren't able to pay the telephone bill this month. But usually, these are the things that you would have in your liabilities. To your liabilities, you will add your capital and this year's profit. Remember from the income statement video that net profit is always added to equity. And so when you're doing your balance sheet, don't forget, take the net profit from the income statement, add it to the equity. Most of the time we forget to do that, and what happens is that the assets do not equal the equity and the liabilities. And that's why the balance sheet is called the balance sheet. Assets equal equity plus liability. The two figures have to balance each other out in that they have to be exactly the same down to the last thebe. You can't avoid to have a 1 thebe difference. It's not allowed. So remember, income statement gives us profit and balance sheet gives us the balance of the two together, and then we submit all of these to BURS to confirm to them that we have actually recorded all our transactions properly.
At first, I thought accounting for my daily life meant having like a huge spreadsheet and doing things, the right way with the income and the outcomes and, the expenses and the assets and the liabilities. And then eventually, I just made it simple. I jot down what I'm spending, what I'm earning, how I'm spending it, when I'm spending it. And when things are not making sense, I have to go back and see where I overspent or underspent, but mostly overspent, So yes, that's how I do my daily expenses.
When you're ready with your income statement, click the link below, download our balance sheet template, and then get your practice on. And when you've done that, catch the rest of our episodes to stay friends with money.